US dollar continues to lose yield support. Equity turbulence does not seem to be upsetting Fed officials and remains unlikely to be a key factor at the 18-19 December FOMC meeting. Market pricing for the December rate rise Westpac continues to expect is little changed over the week, around 70%. Nevertheless, doubts over 2019 have grown. The implied yield on the January 2020 Fed Funds futures contract is 2.74%, down from 2.81 a week ago and 2.94 on October the 5th. There has been renewed market discussion about the Fed delivering less than the 3 hikes projected for 2019 in the Fed's September forecasts. Markets now price just 54 basis points of tightening by end 2019. Supporting the dovish case has been a deceleration in US economic momentum. Westpac's index of US positive data surprises has fallen from above 60% in September to near 40% in November. Reinforcing this trend, the closely watched Atlanta Fed nowcast of Q4 GDP has slipped to 2.5%. The quiet US data calendar in the week ahead leaves plenty of scope for markets to keep running on the notion of an early 2019 Fed pause, weighing on yields and the US dollar. The US dollar's best hope near term might be speeches by Fed Vice Chairman Clarida on Tuesday and especially Chairman Powell on Wednesday. Unless they are emphatic that softer data momentum, tumbling oil prices and the sell-off in equities and corporate bonds are unlikely to impact on monetary policy over the year ahead, the US dollar might be on the back foot. A softer US dollar would obviously be a supportive factor for the Aussie, but it has been torn between the mostly poor global risk environment and the US dollar's loss of yield support. Global equity markets remain fragile and Australia's commodity price support has faltered in recent days. The benchmark iron ore price in China, for instance, has fallen below $72 a tonne, a one-month low. Australia's domestic economy remains broadly supportive, with this week's RBA minutes and speech by Governor Lowe reinforcing their optimistic outlook for 2019, albeit with one eye on the ongoing fall in house prices. In the week ahead, we will see Q3 data on the construction sector and business investment, which will help form forecasts for Australia's Q3 GDP report due on December 5th. The obvious wildcard in the week ahead is the US-China trade war. There are likely to be many competing media stories trying to predict what Chinese President Xi and US President Trump will agree to or not at the G20 meeting, which begins in Argentina on November 30. The Aussie dollar would be one of the key beneficiaries of any major improvement in US-China relations. We'll speak to you next week.